So today's video is definitely going to be one of the most important video what I've made so far, because in this video guys, I am going to answer this one question which is bothering me right now. Anup, why are you always bearish? Guys, today in this video, I have prepared some very important facts just to show you why my take on market right now is still bearish, even if the price of Bitcoin is going to show any sort of a relief rally type of scenario. So first thing first, inflation has increased 0.4% in September month, more than expected despite rate hikes. Yes, we are aware the Federal Reserve is hiking up the interest rate, but even after the hawkish Fed, inflation is still out of control. It's not just only in the US, but also if you look at the harmonized index of consumer price inflation rate of European Union from January 1997 to August 2022, you can see right now inflation in Europe is also record high. In average, we were around 2.2, 2.5%. But now, if we look here from 2022, we are somewhere around 10 to 11%. And this here, right, is also a big warning sign for all of us, because, you know, inflation getting out of control means the Federal Reserve, the European Central Bank, is going to hike up the interest rate further. Because if you look at the chart here, the federal funds effective rate chart, let me show you very quickly what interest rate hike actually means. Interest rate acts on financial valuation the way gravity acts on matter. The higher the rate, please listen carefully, the higher the rate, the greater the downward pull. That's because the rates of return that investor needs from any kind of investment are directly tied to the risk-free rate that they can earn from government securities. So if the government rate rises, if the interest rate rises, the price of all other investments must adjust downward. Yes, adjust downward. And I just showed you, if we look at this as a Bitcoin chart, guys, you can see a clear uptrend, and this here was a clear downtrend. And now if you look at this federal fund effective rate from 2022, we are clearly heading here to the upward direction. And now according to this, if the government rate rises, the price of all other investment must adjust downward. So this means the market is expected to see further corrective movement as long as the interest rate rises. So please guys, please keep this in mind. That's why as long as the Fed is going to hike up the interest rate, the market might not be bottoming anytime soon. And we are aware the next month, November and December, I think they are going to hike up 75 basis point each. So we have to be very careful, and this is also one reason why I'm still very skeptical, and I'm also expecting the market to see further corrective movement, even if we are going to see any relief rally in the immediate short term. Now, beside this guys, what I also want to include is the GDP. GDP fell 0.9% in the second quarter, the second straight decline, and a strong recession signal. What we know, according to this first quarter and second quarter, we now have two consecutive negative GDP, and two consecutive negative GDP means the country is in a recession unless you change the definition of recession. So this was also a big warning sign what was being flashed. And beside this guys, what I also want to talk about here is this margin debt. For those individuals who are unaware of margin debt, the amount of money traders have borrowed to buy new shares using their stock holding as collateral. So what this actually indicates, whenever the margin debt is increasing, for example, I'm going to show you the combination with S&P 500, the relation between the margin debt and S&P 500. So whenever the margin debt is rising, the market also tends to follow that movement. If the margin debt is rising here to the upside, so does the market. And now if the margin debt starts declining, what does this actually indicate? That indicates now traders are not borrowing any money to buy new shares, and that signal market is also going to follow the margin debt. So in that case, you can see margin debt started going upward, so did the S&P 500. Margin debt started declining, so did the S&P 500. So each and every time we had this margin depth in an uptrend, S&P 500 followed. The reason why I'm actually talking about S&P 500 is because we know crypto market is still very much correlated with the traditional market. This is one big reason why I'm actually combining this margin depth and S&P 500. So if you follow this margin depth here, we were clearly in an uptrend. But when we had a retracement here, so did the S&P 500. And now if we look at this from August 2022, guys, please be careful because margin depth is clearly declining, and declining margin depth means S&P 500 is going to follow, and S&P 500, if it's going to see further corrective movement, so will the crypto market, because we know they are all very much correlated. So this means the traders are not borrowing any money to buy new share because they are buying using the stock holding as collateral. So if margin depth starts falling, they are going to get the margin call, and that is also another reason why the market is tend to see further corrective movement as long as this margin depth shows this corrective movement. Beside this, guys, beside this, what I also want to include today is this one very, very important fact. Fed's Q2 to hit full stride with central banks shrinking $9 trillion portfolio. What does this actually mean? Now I am going to use this Q2 QE, quantitative tightening, quantitative easing, in this S&P 500 chart and show you why each and every time this QE has begun, we have seen some very, very volatile movement in S&P 500. Now, before I start talking about this Q2 QE, let me give you a short definition what quantitative tightening means. Quantitative tightening QT refers to monetary policy that contract or reduce the Federal Reserve System Fed balance sheet. This process is also known as balance sheet normalization. In other words, the Fed or any central bank shrinks its monetary reserves by either selling treasury government bonds or letting them mature and removing them from its cash balance. This removes liquidity or money from financial market. So when the Fed decides to start with this quantitative tightening, that means they are reducing their balancing, and this removes liquidity or money from the financial market. Now, if you look at this QE, quantitative easing, the opposite of QT, quantitative easing is a form of monetary policy in which a central bank like the US Federal Reserve purchases securities from the open market to reduce interest rate and increase the money supply. If you compare this QE QT with S&P 500, you can see, for example, after this global financial crisis from 2009, quantitative easing programs begin. The market started showing this impulsiveness until we had this QT. After that, we had this small corrective movement. Another quantitative tightening increases, another bigger retracement. Now, you can see after this 2020 Black Swan event, we had this QE, quantitative easing. That means the Federal Reserve purchases securities from the open market to reduce interest rate and increase the money supply. As soon as the money supply increases, so does the market. For example, S&P 500, you can see we were clearly in an uptrend until QE ended, and we have just started with this quantitative tightening. Quantitative tightening means remove liquidity or money from the financial market. And what does this actually indicate? We don't have enough liquidity, and this could result in further corrective movement here in S&P 500. And if S&P 500 is going to see further retracement, it is going to pull the price of crypto market as well. So guys, this is another reason why I'm actually warning you. And not just only this, guys, what I also want to include today is not just only S&P 500 or Bitcoin, but also some big tech companies like Microsoft, Google, Apple weak right now because the macro economy is not looking that good. And this is why I was showing you guys with so many different examples. Even though the market might look like it has bottomed, I am ignoring this fact. If this is an actual accumulation phase, and after this accumulation phase we are going to witness a new market phase, will the macroeconomy support this? No. This is another big reason why I am staying very, very skeptical, even if we are showing some consolidation or range bound around this 19 to 20,000 range. So that was the reason, guys, why I also shared this one analysis with the help of this ETN normalized and Williams percentage error that the market might not have bottom, because we know in the past price action, whenever this ETN normalized goes above 95, and exactly at the same time the Williams percentage error appears around minus 95, we get a confirmation that around that area the market might have bottom. And if you look at this price action of Bitcoin here, you can see after this ATN normalized and Williams percentage error confirmation, we see this vertical green line appearing. And whenever we have seen that happen after some consolidation, weeks of consolidation, market has started with this new impulsive movement. You can see in 2017, after this corrective movement, when we approach around this 3,000, 3,500, 4,000 area, we got another confirmation here in ATN normalized and Williams percentage error. It signaled around that area the market has bottomed. After some consolidation, you can see after some weeks of consolidation, we had another new marker phase here like this. Another corrective phase started, but when we had this black swan event here from 2020, exactly around that area, we had another confirmation from this ATN normalized and Williams percentage that market has bottomed around that area. And you know what happened after that? We started with this new marker phase. And also, guys, also after this bigger price retracement, what we had here in 2021, around this 30,000, around 30,000, 31,000, this indicator here to downside indicated the market has bottomed around that area. And after some consolidation, you can see we did started this new marker phase and also made a new all-time high. Now, if you look in our case, this indicator is still very, very quiet. So if we see this ATN normalized appearing around this 95, and at the same time this Williams percentage are also around minus 95, then we are going to get confirmation that around this area, whenever that happens, right, the market might have bottomed and we could be starting with this new impulsive movement. So right now, if we look at this ATN normalized and Williams percentage error, it is very, very quiet. So I don't think the bottom indicator is going to happen anytime soon. So that was the reason why I'm actually avoiding that this here could be an actual bottom, because unless the macroeconomy doesn't stabilize, I think the price of Bitcoin and also other financial asset is going to see further corrective movement. Beside this, guys, beside this, what I also want to show you is this Wyckoff distribution schematic. Why I'm actually showing you this again and again, because we know with the previous example we found out that market might not have bottomed yet, and also through the macroeconomy, I strongly believe the market could be in this redistribution phase type of scenario or distribution phase. So once we lose the support around this 18 to 19,000 range, we are expecting an actual trend reversal to happen. I think around 11 to 12,000, consolidate, months of consolidation, right, or so-called accumulation phase, and only after that we are going to start with this new marker phase here in this manner. So that is another reason why I am remaining very, very skeptical. Even if we are going to see any sort of a relief rally type of scenario here in the medium short term playing out for Bitcoin, it's not going to change my opinion, because we know around this area, the price of Bitcoin is forming this so-called descending triangle, which is also considered as a bearish scenario like this. You can see upper line still rejecting the price, lower line acting as the support. So in a downtrend, if this lower line support around 18 to 19,000 gets broken, please be careful. This descending triangle, which is considered as a bearish scenario, is also going to play out parallelly. And beside this, guys, what I also want to quickly show in this video is this Bollinger Band, because this Bollinger Band squeeze is happening, which is also indicating the upcoming volatility. So please be careful and please prepare yourself properly. Yes, guys, we know if this Bollinger Band squeeze is going to break above this upper band, then we are aware this impulsive trend is going to continue, even though in the bigger picture the market might look bearish. But if the lower band around 18,000-19,000 gets broken, then we have to prepare ourselves for the worst case scenario, because in that case this descending triangle scenario plays out, and also this distribution schematic from Wyckoff, because according to this Wyckoff, we are in this phase E, and after this phase E, you can see in this example, price usually continue this corrective movement here like this. And beside this, guys, what I also want to show you here in a daily time frame is this ascending triangle, this bearish ascending triangle, which is being formed during downtrend. Yesterday I showed you, even if the price of Bitcoin is going to show this bullishness, unless we are going to flip this resistance into proper support, I am going to expect a movement here in this manner. And now you can see, guys, the price of Bitcoin is still facing this resistance. Yes, this line which previously acted as support is still acting as a resistance. So unless the price flips this into a proper support around 19,900 to, let's suppose, 20,000 range into proper support, we are still expecting this trend continuation to happen here like this. I mean, a slow continuation towards this lower target area, because I showed you the bottom CPI line was rejecting the price exactly around this 19,700, 19,800 range along with this lower line. So that was another reason why we were expecting the price of Bitcoin to show corrective movement and this to turn out into a perfect fake out scenario. And now we are fighting to remain above this very, very important line between 18 to 19,000, because once this 18, 19,000 support gets broken, guys, things are going to turn very, very ugly for Bitcoin, because in that case, this line here, this red line which is sitting around 17,400 is going to be looked as our potential upcoming target, because this is also the target from this ascending triangle. Because if this trend continuation is going to happen, you can see 17,000 is going to be our target area, and also with this CPR indicator. So this was some of the scenario that I wanted to include into this video. But now I'm sure those who were asking me here and why you're always bearish, you guys got the answer. So this is it for today, guys. If you enjoyed my work, if you enjoyed my hard work, then please destroy that like button, and for those individuals watching this for the first time, hit the subscribe button and the bell. Now by saying this, I'm signing out. My name is Anup. Bye bye.